Now, what critics are already calling a very unwelcome blast from the past. President Obama wants to reduce fees for first-time home buyers in order to boost tepid home sales. It's the kind of thing many economists and lawmakers blame for launching the recession that devastated the market and the rest of the economy several years ago. Chief National Correspondent Jim Engel has details.
In a desperate attempt to boost the housing market, the jobs associated with it, and the economy as a whole, the Obama administration's moving to loosen borrowing standards for mortgages.
Access to mortgage credit remains unnecessarily tight for all but the most pristine borrowers. Lack of available credit is one factor holding back the housing recovery and preventing the economy from operating at its full potential.
Since the administration's policies have failed to bring the economy back, housing is one of the few hopes for job creation and economic growth. But as the nation learned with the last recession, loose credit is like playing with a loaded gun.
The public is the ultimate underwriter of their decisions, and that's why it's so important after the first bailout that we had that was so tragic to our economy that we don't repeat the same mistakes.
Which is why Edward DeMarco, until recently the head of the Federal Housing Finance Administration, which oversees several federal housing agencies, had tightened policies for backing home mortgages. And after no-document loans where borrowers didn't even have to verify their income, Congress passed the Dodd-Frank law, which also imposed limits on lenders. It was the implosion of mortgage-backed investments by banks that threatened the entire financial system.
And cost taxpayers hundreds of billions of dollars. And Mel Watt and the administration are going the opposite direction.
Mel Watt, who's taken DeMarco's place, is now talking about loosening standards. One reason is to help an economy that's struggling.
And a recovery that seemed to be in progress really has now flattened out.
But analysts say the administration's also responding to pressure from part of its base to win political points.
This is essentially a sop to the low-income housing groups, affordable housing groups, many of their constituents, and saying, look, we're going to do everything we can to help poor people get into houses.
Former officials look back at the last round and fear the administration is flirting with danger.
We don't want to repeat the same mistakes that got us in such economic trouble in 2007 and 2008. And the way to do that is to make sure that only qualified buyers are eligible for loans, especially federally guaranteed loans.
Now, lending to people who may or may not be able to pay it back, say experts, is playing with financial fire and expecting the taxpayers to pick up the pieces. That, warns one observer, cannot end well. Brett.
Okay, Jim, thank you. I asked former Treasury Secretary Timothy Geithner about the proposed new mortgage rules earlier today, just part of a wide-ranging interview on some of the things Geithner wrote in his new book, Stress Test. First, again, the administration's potential moves to make more credit available to boost housing.
It's going to be a difficult balance for them to strike because, on the one hand, you want to make sure you reform what's still a very broken housing finance system. And the other side of this equation is to try to figure out how to make sure that the economy is getting stronger before we do things that might weaken in the future.
But you understand the concerns.
Yeah, I think that if people are worried about are we going to go recreate or preserve the same set of systems that's got to help contribute to the crisis, that's a very valid concern. We shouldn't do that. We shouldn't do that. And they'll work through this. This is not rocket science, Brett.
It is complicated.
It's complicated. It's not rocket science.